to see what's going through your mind when you see the price action. What do you anticipate happening? Where do you see future trades forming an entry where you can pyramid it? Because I'm doing that. I'm highlighting the chart right where I know it's going to do something that you haven't even seen in your chart yet. Guess what that is? That's fucking time travel. There's nothing like this, folks. There's nothing like this. And you are a part of history because you were all here when it was made public. You were part of it. Whether you liked me or you didn't like me, you were here when it happened. And I'm telling you, there's dozens of books that have my name and logo on it right now, but there's going to be thousands of fucking people that's going to know about us from future books that's going to be written about. Everything that you had firsthand knowledge of. You watched it. You were here in history when this stuff was made known. That's cool. That has nothing to do with me. It's the fact that the community element of it is just really neat. You know, I was learning about GAN and I was learning about, everything that would constitute, my early stages of what I would view technical analysis and what concepts and whatnot. I always thought, like, what would it have been like to be directly taught by GAN? What would it be like to be taught right side by side, hearing the words live over a chart? This is what's going to happen. That would be amazing, wouldn't it? I mean, I don't have that same affinity now, but when I was younger, that's how I thought about it. And I tried to think about how all the things that I wanted to see as a dream, if I had a dream encounter of having a mentor that really knew what was going on and had an understanding about price action that was unrivaled, what would it be like? How amazing would it be to be able to see them outline something and it come to pass all the time? Just literally just at the fingertips, just go out there and say, okay, here's what's going to happen and watch it happen. Because I was frustrated as a young man, expecting simply because the market was oversold based on a 10 period stochastic, on an hourly chart. I figured that's enough for me to call it oversold. I had no idea what I was doing. And because it was oversold and it started crossing up and the K and D lines were crossed and they were starting to go up, which we call stacking now, that means it should go up tomorrow. That means it should start going up. And I could be a buyer because I only wanted to be a buyer. And then I would watch the things that I try to do then not work. And it would create anger in me. Like I was resentful that the stochastic didn't lift price up. I had a 50-day moving average. It was slanted up. It was pointing up. So therefore, I didn't need to know about a trend line, which I still have no belief in. I think it's bullshit. But the 50-day moving average, simple moving average, that eventually became an exponential moving average. If it was sloping up, and if you were looking at like a trend line, if it had an angle that was inclining, that told me that I want to be a buyer. And all I needed was to see an oversold condition on an hourly chart with the 10 period stochastics. And once it was oversold, I waited for the K and D lines to cross. And then once it came up out of the oversold, the next day, I wanted to be a buyer. What was I trying to do? I was waiting for the opening price to go down first. Why? Because Larry Williams was teaching me to be a buyer of strength. And every time I tried that, Larry, no disrespect, but I had my ass handed to me. I was buying many times as an institutional order flow on a fucking short sell in a fair value gap. And then it would rip lower and then tear my face off. Now, I didn't know that back then. Nobody else was talking about that shit then. But I learned these lessons from losing money. I lost a lot of fucking money doing shit that I thought was working or should have worked and it didn't. And I would get angry, resentful. I would be mad. These fucking indicators. And I would try to mess around. See if I can get the settings to be calibrated. We're going to calibrate the indicators tonight, Uncle Stan. Uncle Stan, I got it down. We're going to go to a 9 period because that's going to make a fucking world of difference, right? It didn't do shit. It just gave me another excuse to go out there the next day and lose more money. That's all it did. I was not looking at price. I was not looking at price. And as soon as I discovered where I was going wrong by looking at indicators, then I said, okay, let me go back to the logic. Okay, and this is for the crowd that's listening that love stochastic. Okay, I'm going to tell you how to use it and make money. Okay, you ready? What did you just say? Oh shit! Now you wait. I'll wait for you to get your pen and pad. Now you want to write shit down, right? Yeah, I'll give you a second. I gotta write this down. He's talking about indicators now. That's my shit. That's my jam. Now let's go back and go through the normal process of a normal, well-adjusted ICT student. We're looking at a weekly chart. We come to the conclusion that we expect that weekly chart to resume going up. Okay, it has unfinished business. It's an imbalance above price. It could be reaching up into, or relative equal highs, or a singular high it's gravitating towards. Is that complicated? Because it's going to be one or the other, or in a better condition, it's going to offer both. That means you have a real strong probability that the weekly expansion is going to be up. Doesn't mean we're trying to predict the weekly close. It just means that our focus should be primarily focused on a gravitation in price going higher. That means, bottom line is, we are trying to be a buyer going into the next week. I'm not saying that's the case for this coming week. I'm saying hypothetically from a rule-based idea. So that way we're setting a foundation for the implementation of an overbought, oversold, i.e. stochastic. So this is how I learned to move away from the indicators, but I had first this stage. Once I understood how to read price, then I could go back in and say, okay, now I'm in a position where I think the market was going to go higher. Now I still haven't learned how to short sell yet. That was too scary for me. Like, I didn't understand selling something I couldn't have my hands on. Like when I buy something, I have it. When I bought shares, or I bought an option, or I bought a commodity futures contract, I understood that I have now the right to that. I can take delivery of it if I wait long enough. But selling short something that I don't even have didn't make any sense to me. So putting that aside for, I've talked about it in the past, but this example is we're expecting the price to go higher. Okay, wonderful. Now go back to that premise of waiting for the market to open up. I abandoned buying strength because I learned that Larry Williams said that he wanted to understand how people could be a buyer below the opening price on big bullish days. And he was demanding that he see a 20% of the previous day's range be above the opening price for the S&P. And then he would be a buyer. To me, in hindsight, looking back at it, I discovered that I was many times buying on a 10 o'clock high, and then my stop loss that would be retracing down to a silver bullet that now today would be a new entry, or really a more sound entry if you didn't buy below the opening price. I would get stopped out there, and then what would happen? Think. I went long buying strength, then it retraces on me, my stop loss gets hit, or it scares me and I close the trade, but it goes into what you understand now as the fair value gap, which is a silver bullet. What's price going to do? Take off. I'm not in it. I'm demoralized. I'm angry. I'm upset. So I learned from that. I said, okay, I'm not going to wait for that retracement. I'm going to buy it as it drops underneath the opening. If I think it's going to go up, I want to find out where we open, and I want to see it drop down. So all I would do is use a 15-minute time frame. And whatever the low was, it was real close to going left. Whatever the first 15-minute low was, I don't care if it was 2 handles. That was what I needed it to go below. Once it did that, then I started buying it. In the beginning, it did not work well. It was me going in and losing lots of money doing that. I would go in and I would condition myself to say, okay, I'm going to figure this out because he says he wishes he could learn this. I'm going to fucking learn how to do that. I'm going to learn how to do that. I'm not going to lose more money with something I can't replicate with him saying he's willing to do that. That was the biggest milestone in my development, by understanding that a mentor